Welcome to the Modern Real Estate Investor Podcast, where we interview the biggest and most successful real estate entrepreneurs, investors, and capital raisers in the world to provide you with the tool sets, the mindsets, and the skill sets to help you conquer yourself, your life, your marriage, and use real estate as your wealth creation vehicle so that you can live a more successful, happy, and fulfilled life of growth and contribution. If what you're after is having it all, if what you desire is becoming the best version you can be across all areas, mentally, physically, emotionally, spiritually, sentimentally, and financially, you've come to the right place. We will bring to you the best of the best real estate entrepreneurs who will give you the insights, knowledge, experience, and skills so that you can go out and crush it financially and across all areas of your life. Grab pencil and paper, sit back, enjoy, and you are welcome to the Modern Real Estate Investor Podcast. To another episode of the Modern Real Estate Investor Podcast, where we interview the best, biggest real estate investors in the world, so that you can learn all the real estate investing strategies, collapse the time that it will take you to build wealth using real estate as a wealth creation vehicle. I have an amazing guest with me today that I'm very excited to get to talk to, connect with, and learn from. And before I introduce him to you, though, I just want to ask all of you for a favor. I want to ask you that if you get some value out of this interview, if you get some insight, some mindset shift, or something that inspires you to go out and take action, please share this with some of your friends, and hit the like button, share, and subscribe. So today I have with me Salvatore Buscemi.
Yes.
Yeah? He's the CEO and co-founder of Dandrew Partners, a private family investment office, and has managed money successfully for over 20 years, and through the creation of multiple portfolios in various cross assets. This includes Dandrew Partners and Core Ventures, where they do venture capital. The Dandrew Partners Fine Arts Enhanced Income Credit Fund, where they invest in art and various other, and they also invest in other assets such as commercial real estate. Sal also has books. He has 4 amazing books. One of them is The Raising Real Money, Real Estate Funds Uncovered. That's an amazing book that I just actually ordered right now because I'm also in the money raising game. He has another book called Making the Yield, which is the real estate hard money lending uncovered, and then his latest book is called Investing Legacy, which talks about how the 0.001% invest. So I'm super excited to get to talk to Sal about that more. And this is my guest, Sal. Thank you very much for being here, and you're welcome to the show.
Thank you, Jose. Thank you so much. This has been quite an experience. We're so far apart, but we're so close. We're in like almost the same climate, right? Only it's a little hotter where you are, I think, today than where it is where I am. So, no, it's amazing, and thank you for being on here. It's really a pleasure.
Thank you. It is hot, and I'm like sweating, and it might be because it's hot, but it also might be because I'm kind of nervous. It's been a while. So yeah, and so Sal, the first thing that I like to do with my guest is I like to ask them to give us a 75-second introduction of themselves and what they do.
Yeah, I am an investment manager for several wealthy people, families, assets.
That's it?
And
Oh,
yeah, that's really it. We invest into world-class assets in real estate, class A, that I like, and other things too that, you can brag to your friends about. And one of the other things that we invest into is also um, emerging life science companies, because, that has a greater impact to be able to make, where people can actually, invest in something and leave a legacy, not just financial, but something else. And it's a lot of fun. I enjoy it. I get to work with people every day, new people, and I never get bored unless I want to get bored. If I am getting bored, then I have to find more people like you to hang out with, I guess. So, my day to day is being on the phone all day, just talking to people and investors.
cool. That sounds awesome. So then, investor manager, that's basically what you call the career, right?
Yeah, correct. So
So
we allocate and invest money into these assets, and so that's really what investment management is:
okay.
taking money
So you
from
manage
you and putting it into stuff.
the money of all these wealthy people, and you manage it for them, and you put it in assets that would give them a return, right?
Correct. Yes.
And you do this with what is it called? It's the Dandrew Partners Capital. That's
Yeah,
the
we do that with, we use various structures, but that's usually the one that we use to, to make those investments in real estate.
That's cool. And
Yeah.
I was right now when I was going through all of your stuff, when I was getting prepared to come on this interview, I saw that
Mhm.
you have like a master class, I
Yes, that is
guess,
true.
coming
Yeah.
up to teach other
hmm
people how to raise capital.
Yeah, it's in Miami, and it is going to be on June 15th and 16th. But we also have another one too that's in March, and that is if you go to salvatorebuscemi.com forward slash masterclass, and maybe you can provide a link to them, you'll see the dates. And actually, you know what? I'll check right now. I just don't want to. We have so many things going on in our calendars today. It's so hard to get confusing with the dates, and that's the last thing I want to do. So the dates that we have here are. I am going to show you in a second. And it is March 23 to 24 in Miami.
Hmm. Okay, yeah, for sure. We'll provide the link. I actually already have it, so yeah,
Thank
I'll
you.
have my team provide it as soon as it goes up and put it across, everywhere. So then raising capital is something that you actively do.
Yes, all the time.
Ooh, and
It's
that
my
then.
full-time job. That's the full-time job. Yes, as an investor. If you're a real estate investor, the second rule of real estate is to always be raising capital.
Mhm. Okay. Raising capital. So tell me a little bit about that. Like, I don't even know what to ask, honestly. So, raising capital. Like, what should someone who is getting started in real estate, or maybe has already had like a track record in real estate, but wants to like expand, do things bigger, go bigger, and scale, and they're thinking about
Mhm.
starting to raise capital, use other people's money, maybe do a syndication or start a fund. What do you
Yeah.
say to someone who is in the midst of starting to do this?
I would say that you probably want to partner with someone more experienced than you are selling their deals and not yours. Because when you're starting out, people aren't going to trust you, especially when you're doing multifamily or anything kind of heavy. So it's better to show that you can raise money for someone else who's more successful than you and sort of get a track record off of that to start with. Does that make sense?
Yeah, yeah, for sure. Yeah, that's actually what I want to do. Like, I don't want to really develop, but not really. I want to develop real estate, properties, but not really. What I want to do is just, find really good deals and raise money for them. That's really what I want to do.
Well, what you want to do is the opposite, right? What you want to do is you want to raise money first and then put it into the deals. And the best way to do that is to make sure that you have meaningful conversations with investors, really finding out what they want to invest into, not bringing them a deal you think is good, but they might not like it. Remember, the money always has the final voice, and you have to build those relationships first with those investors before they will trust you with their wallet.
Okay. So so first the money and then the deals.
Yes, that's correct. Yes. Never the deals. What you want to do is you want to build a community like you have of followers, but instead of followers, they're following you because they're real estate investors. And over
Hmm.
time, as you continue to dialogue with them and talk to them and do all sorts of other things as it relates to just cultivating the relationship, it becomes much easier at that point for you to be able to call the capital to be able to do that. Now, here's something interesting. I just published a little book yesterday. It just went up today in preparation for your podcast, and it's
Cool.
called and it's free download. And if you go to callingthecapital.com, there are 20 ways for you to be able to raise money without having to sound desperate or needy. And your
Nice.
audience, I
Calling.
mean,
Hello, morning kings and queens. At my company, Millionaire Network Automation, we believe in the power of networking. We believe that in real estate, your net worth is your network. This is why we help real estate investors raise capital by connecting them with their ideal investors and helping them build a massive network of their ideal investors in less than 30 days and with only 4 hours of work per week. If you're interested in this, click the link below in the description of this podcast to learn how you can propel your growth with a reliable system that will consistently help you connect with your ideal investors, build trust, add value, get your investors to promote you and put you in front of more of their investor friends, and raise more capital faster and in a much more effortless way so that you can achieve your financial freedom and still have the time and the energy to pour into every single other area of your life. So go watch the training, and you're going to have the opportunity to book a call to talk about how you can get this 100% done for you system implemented in the next 5 days. So thank you for watching, and I'll see you later, and enjoy the rest of this episode. Bye-bye.
you would definitely like that, Jose. I mean, that is up your alley right there. Yeah, I see this, the movement of the pen. You're excited. So that's really good. I really think that your followers would really like it because you have to build relationships first, and real estate is still a relationship based business. It's not transactional like crypto or stocks or anything else like that that's day traded, right? It is a relational business, and if you want to be successful long term, you have to build those long term relationships, right? Starting at the age of 22, starting at the age of whatever it is, you start. I mean, some people have time at their side and they're, learning from the wisdom of older people like I did, growing up and coming into this business. But I mean, you have your whole future ahead of you, and there's a lot of opportunities that are coming up right now, I feel, in commercial real estate and other parts of actually the whole real estate market, including housing, because of interest rates that have gone up for the first time in a while, and that's really handicapped a lot of people.
So is commercial real estate what you're interested in the most, or what kind of
Yeah, I
assets do you like to
we
invest?
do like the commercial real estate because there's better tenants, right? Tenants are richer than we are. We don't want to invest in multifamily where it could be the tenants are not as rich and might not have a job tomorrow. So we like having corporate credits and tenants
Mm.
who are well known, and that makes a lot of our investors feel good at night when they pull the covers over their head, knowing that they have a very high class tenant rather than someone who might not have a job tomorrow.
Yeah, that totally makes sense. And apart from that, what else makes commercial real estate interesting and attractive to you?
What it is that it's not just a wealth creation device, but today it's become much more of a wealth preservation asset class. And there's different ways that you can participate in it. You can lend, you can be an equity investor. And I like that. There's many different ways that you can control the deal, or you can not do the deal at all, right? That's the kind of control that you get in these real estate deals that you don't get, say, trading stocks, right? It's not anything you're not gonna be able to call the CEO of a company and complain that his share price went down 20% and you own 200 shares. So he's not going to pick up the phone. So you have to think about it that you have a lot of control and discretion over the people who you invest with and the people who you, choose to basically trust with your wallet.
Hmm. Okay. And with this deals, what kind of because you raise, so you like commercial real estate, and then you raise money, right? You have the money already. I guess you're running a fund, right?
Correct. Yes.
So you already have the money available for whatever deal you come across. So you find a really good commercial real estate. And so what is the like investment structure that you use? Fund or joint venture or
No,
something?
no, that's a very good question. We use an SPV structure. So we'd set up a different SPV, and that's just more of a normal syndication structure. It's easier
Okay.
that way because then each deal is in there. The problem is with funds and real estate is that um, if something goes wrong, that's going to sort of affect the entire portfolio. And that is something that we don't want. Everything is sort of what they call crossed. So if you knock it out of the park over here, and then you only hit like a double over here, you're averaging out, your average is not as high as you think it is. And there's a lot more opportunity and discretion where a lot of investors can choose to invest in a deal where they actually know the deal and not in a fund where they're trusting other people to make those investment decisions.
Mm. So then you have both a fund and and you do a syndication. So like from the money that is in the fund you use to the syndication. Is that how it works?
No, no, no. We use the funds for different things where we're allocating into certain other asset classes, such as like pools of mortgages or something like that. And I explained that in my second book, Raising Real Money. When you look at it, the syndication structure you want to use for commercial real estate is just basically using an SPV and having all of your investors as members, and then you're the managing member. It becomes very easy that way. And then you open up a bank account once you get the EIN, and it's just very fluid process from there.
Hmm. Yeah, so it's basically you have a like a real estate investing college. I just ordered all of your books. It's pretty cool. I'm looking to learn, and you basically have everything there. You have all of your journey, written down, which is awesome.
You think you're
So
the
what
first
led you
person to
to?
ask me all these questions?
Yeah, I know. Yeah. So what led you to like write those books? Is it just
I
because you wanted to stop repeating yourself, or is there something more
y-
meaningful?
No, it was more meaningful because what happened is those books were written after the last great recession of like 2008, 2009, where you had a real problems. And a lot of people who invested in real estate didn't know what they were doing. And I wrote books because a lot of them have lost millions of dollars. And they said, well, okay, well, what's the right way to do it? And so I wrote these books.
Cool.
Yeah, I like
Yeah, that's
writing.
awesome.
To me, I like writing. It's fun. It's like my side gig, as they say.
And you actually like writing. That's I love it. And it's really awesome because that's a really cool way for someone like me who doesn't have any experience, is just getting started, to absorb all of the knowledge of someone like you who has a
Exactly.
20-year plus track record of experience.
Yeah.
um Pretty cool for a couple of bucks, basically, right?
hmm Yeah. I
So.
mean, there's a lot of knowledge out there, but not a lot of people are hungry for it like you are, or myself. I'm
Mhm.
constantly learning. I'm constantly learning. Constantly reading books. I read books you would never want to read, but they're fun for me, more financially oriented math books sometimes. But they're a lot of fun.
So I'm just gonna tell you to see what your perspective is on this. But like, a partner right here in this company that I'm currently in an office where is
hmm
like a bunch of companies are here,
hmm
and they do, basically their business model is that they lend people money, right? They lend
hmm
people money, and then if those people don't pay, obviously they need to pay interest, but they give them a period of time, and then if those people don't pay, they gave like their house or some type of asset as like a
Collateral.
yeah, collateral, right? So
Yeah, oh yeah.
real estate.
I wrote about that in my blue book, which you ordered, Making the Yield. It's called Hard Money Lending or Equity Lending. And I've done a lot of loans in my career, and a lot of people wanted to know what the right way to do it was, and that was it. And one of the things we talk about, Jose, in that book, Making the Yield, is cross collateralization, meaning being over collateralized. And
Hmm.
that's a great way to keep hearts and minds together, especially when you're working with like a newer rehabber or someone like that.
Yeah, and so the question that I wanted to ask is, could you use a fund for that? Like, could you?
Yes, you should use a fund for that. Yes, you should be
Yeah.
using a fund. That is a fund structure. That's perfect. That is used. And when you look at these, you never want to joint venture in a single asset deal like an apartment building using a fund. You're using a syndication structure, joint venture. Funds are used to be able to buy assets, and it's a different legal structure, but it's much more advantageous with pooled assets.
And then like the business model is crazy because it has like a 400% return in like 3 months. Like the guy lends,
hmm
I don't know, a million quetzales, which is the currency here, a million quetzales for
hmm
3 months. And if in 3 months he doesn't pay, the collateral was a 2 million, a 3 million, a 3 million quetzales property, which is insane, right? And now he can like fix it, sell it for that price, for the market price, and he makes 400% like this really quickly. And then he was telling me a story of how one of his friends, or a connection that he has, was needed money for his building, like a really large apartment complex and commercial, like a mall, right? An apartment complex
hmm
and a mall, and he was looking for money, but he came to him, but he didn't have that amount that he was looking for. And then I'm just thinking, and I'm like, damn, what if we had a fund, and then he did have that money, and then the return would have been insane. So that's exciting.
It
Um,
is exciting. I should translate my book into Spanish down there. That would be that would be interesting because there's a lot of people that need to understand that business, I think.
and then there's like really blue ocean here. So here in Guatemala, like at every corner, there's like a new development. There's like a development, like
It's
Guatemala
always
is
going to be that
growing,
way. Yeah, that's going to continue going on there.
and
Always.
there's a lot of opportunity. So much that I'm like overwhelmed, right? And that I wanted to take advantage of, and it's like a blue ocean. I'm actually working with a couple of developers,
Oh, good. Okay.
helping them raise money through networking. And the way that I'm doing that is that I'm using podcasting as a networking tool. So instead of having a podcasting agency, I have a networking agency, and we
No,
just
that's
use
a very
podcasting
smart, very smart. That's ingenious.
as a networking tool, right? So thanks. And that's where I am right now. So from that, it's a pretty limited perspective, but like from your wisdom and your experience, what do you tell me?
I would tell you to go out there and start talking to investors very evangelically. talking about how you're, about real estate, much like anyone else of your friends would talk about the same about sports, right? There's always that
Yeah.
annoying friend that talks about sports or being a vegan or something like that. And what you want to do is you want to be able to build a community around investors who are looking to invest into real estate. And it communicates to them exactly what you're looking for and how this works, because the time for you to ask for that money later on, all that attention you paid to them earlier on will pay off dividends later. So
So
build a
talk
network first
evangelically.
rather than looking for the deals. Yeah. Do not look for the deals. There'll always be deals, but there's never always going to be money. Look for the
Hmm.
money first.
Really? Okay.
All
Because
right.
deals, like I have a lot of them because like my clients are developers.
Everybody does. Everybody does. Right.
Yeah.
But nobody has the money. So if you're able to close the gap by being the money guy and building those relationships with investors, now you're in a position of prestige and power.
Hmm. Cool. Prestige and power. I call it fame, fortune, and experience. Fame, fortune, experience. That like I have that on the top of my mind. Right. Fame
Yeah.
is like having a track record and doing things right.
Anyone
Um.
can find a deal, right? I mean, Jose,
Yeah.
anybody can, but I mean, can anyone find the money for it?
Yeah. So
Mm.
how do you find the money? Obviously networking with the right people, but like what
I,
else?
you know what? I actually has just spent the whole week. There's nonprofits that you can join where there's a lot of people who, on boards and things. That's actually a very good way to do it. But I also go to a lot of conferences, and just here in Miami, I was at the Florida Ventures Conference, which is really cool, over here in Brickell. And we there are people there who are like-minded. If you're able to be in a room where there's like-minded people, then you're going to have a plus. That's really what's going to work. And try to get involved with nonprofits. And also, today we're in a technology world, so you should start networking using podcasts, newsletters. I send out emails all the time, right, to my investors, but that just builds that helps build the brand.
Awesome. All right. Well, we have a couple of minutes left, about seven. And I wanna, this
I
is
have,
how I end.
yeah, yeah.
This is how I end every single one of my episodes. And I
Mhm.
have 5 questions. So,
Okay.
around a framework, mindset, map, motion, measure, money. So, first about mindset. So, what do you say would be like a mindset shift, that someone, or the type of mindset that someone would have to have in order for them to be successful in this realm, in the realm of raising capital, making deals, and managing money?
You need to be patient, but you also have to be a good listener. You have to be a very good listener and listening to people. And that's some of the hard part for people to do is when they're talking to investors is that they don't listen. They just want to meet someone and treat it as transactional. Start looking at it as being much more relational. Does that make sense?
Relational, yeah, relational, patient, and listen. Okay,
Correct. Yes. All right.
makes
All
sense.
right. What's the next question?
Map. So, map is about clarity.
Hmm.
So like, and most people don't have clarity, right, of anything, right, of nothing. So, what piece of advice would you give someone that is just getting started in the real estate investing world, so that they can, so that they're clear on where they're going?
I think what you need to do is to write out your goals and write them where you see them. And for the aspiring investor, that could be, I'm going to talk to 4 new investors each week. And if you're able to hit that goal, then you know that you're making progress. But you have to have pre-written goals. You have to have it mapped. Otherwise, who's going to follow? You have nothing to follow.
Okay. Motion. What is one habit that you have that you think has contributed to your success in this capital raising journey?
I send a lot of emails out. I'm always on top of it. I'm always talking to people, and it takes time to write it sometimes. But the difference between my firms and other firms is that they don't have the same success rate we do raising capital as quickly as we can.
And the reason for that is just your follow up and you
Exactly,
building relationships with people and all that. Yeah.
because
Okay.
nobody's going to give you their money without giving you their time first.
For sure. Okay. The last one is, the last one before getting the money, mindset, map, motion, measure, money. It's about measure, right? And measuring is about KPIs, about tracking your habits. Like, I track everything in my life. So, like, what would be someone looking to raise capital, like someone that's going to dedicate their life to raising capital, basically? What would be like a metric, and a very, very important metric that they should track?
I think it would be the assets under management or the number of people they talk to with the amount in aggregate that they can invest into these deals, really, and getting really granular about it too. Not necessarily about your KPIs, but the KPIs of basically the investor. So, I'm on the phone with investors. I'm gathering 10 pieces of information from them that I put into a spreadsheet. That spreadsheet is an asset with people because it tells me exactly specifically that this guy does not like multifamily, but he likes industrial and other things like that. And I think when you start looking at it and you start building that list, that contact, like it's a work of art, you put a lot of time and appreciation to it because it's going to be your asset that's going to feed you for life.
Hmm. Awesome. Well, Sal, do you have anything that you may want to add?
Yeah, I want your listeners to go to callingthecapital.com, CALLING capital, CAPITAL.com. And there's a free download, and it's 20 ways to raise capital very quickly without sounding desperate. And I think you would definitely like it, Jose. But I think some of your investors who are newer to the scene might really appreciate it because it really helps. And it's a lot of the strategies that we've used, not just in real estate, but also in venture.
Awesome. Well, Sal, thank you very much for being here. I really appreciate your time and taking the time to be
Thank,
here. And that's it. Thank you.
thank you, my friend. Thank you.
Bye-bye.
That was good. Was that good?
Thank you for listening to the Modern Real Estate Investor Podcast. We want you to know that we love and appreciate you, and we're super grateful about being part of your journey of becoming a successful real estate entrepreneur and having it all. Please share this episode with a friend who you think will be impacted positively. Send it to someone who you know is interested in real estate and dreams of having it all and being the best they can be across all areas. And if you thought this episode was really valuable, share it on your social media as a post or a story. We have a special gift for all of those who contribute to the Modern Kings and Queens movement. So for those of you who decided to share this episode and help us spread our message, send me a message letting me know on any social media platform at Alex Ramirez, the Modern King. I have a special surprise for you. Thank you for watching, and I'll see you later.